Hey everyone, and welcome back to Talk Tickers, the show where we like to, really break down these earnings calls and try to, help you guys make sense of what's going on in the market.
That's right.
And today we're going to be doing a deep dive into Albemarle's Q3 2024 earnings call.
All right, sounds good.
Albemarle, for anyone who doesn't know, is a major player in lithium and specialty chemicals.
Huge.
Real bellwether for the EV and battery space.
Yeah, absolutely. And what's interesting is their stock closed at $100.84 on November 8th. So that was a gain of almost a full percentage point. But then after hours, it took a, almost 3% dip.
Oh, wow.
So earnings calls can definitely move markets. And this one seems to have spooked some investors.
Yeah, for sure. So let's try to figure out what exactly is going on here and why investors are so spooked. So, maybe we could just start with the numbers. Where do we even begin with this one?
Well, the headline numbers weren't great. Albermarle reported a net loss and a loss per share for the quarter, but it's important to look at the adjusted figures as well. The adjusted diluted loss per share tells a slightly different story, and it's less dramatic than the raw numbers might suggest.
Okay, so not a complete meltdown, but definitely some cause for concern.
Yeah.
What's driving these kind of less than stellar results?
Yeah, so the main culprit seems to be the drop in lithium prices. We've been seeing this trend for a while now, and it's putting pressure on Albemarle's bottom line. So both net sales and adjusted EBITDA are down year over year, largely due to this pricing pressure.
Yeah, lithium prices have been notoriously volatile. It's like riding a bucking bronco out there. But even in this, kind of tough market, there's got to be some bright spots, right?
Oh, absolutely.
These companies don't just roll over.
No, there are definitely some silver linings here. Albemarle's energy storage and specialties segments are showing strong volumetric growth. That's a positive sign, especially since energy storage is such a critical piece of the clean energy puzzle.
Yeah, it makes sense. Everyone's talking about EVs and, the need for better batteries and grid storage. And so Albemarle seems to be in the right place at the right time, even if lithium prices are making things a bit bumpy.
Exactly. And their specialties and catch-end businesses are also posting positive EBITDA growth. Plus, their operating cash conversion is exceeding 100%, meaning they're generating more cash from operations than they're reporting on net income.
Wow.
That's a sign of strong financial management and a healthy business, even in a challenging environment.
Okay. That makes me feel a little bit better. That's good to hear that they're generating cash, but they're also cutting costs, which always makes investors nervous. And they announced a 6 to 7% workforce reduction.
Yeah.
Which translates to almost 1,000 jobs. That's a pretty big move. What's the thinking there?
Yeah, it's definitely a significant move, and it suggests that Albemarle is serious about getting ahead of the current market challenges. They're not just cutting jobs, they're also implementing a new operating structure, shifting to what they call a fully integrated functional model.
Now, that sounds kind of interesting. What exactly does that mean, and why are they doing it?
So basically, they're breaking down the traditional silos in their operations and centralizing key functions like procurement and supply chain management.
Okay.
This approach should allow them to leverage their scale more effectively, negotiate better deals with suppliers, and ultimately improve their margins. It's a classic efficiency play.
So they're streamlining, making things a little leaner and meaner.
Exactly.
Sounds like they're adapting or dying.
Precisely. And the goal is clear. They want to achieve significant cost savings somewhere in the range of $300 to $400 million. On top of that, they're slashing their 2025 capital expenditure budget by at least $800 million, a 50% reduction.
Well, they're not messing around. Albemarle is clearly sending a message to the market that they're committed to financial discipline and trying to, weather this storm. All this cost cutting makes me wonder, what's the long-term plan here, especially for their core business lithium? What are they saying about the state of the lithium market?
Well, they're acknowledging that the market is challenging right now, but they're also highlighting some potential positive trends. For example, they point to upstream and downstream curtailments, which means that some lithium producers are actually scaling back or even shutting down production.
Wait, so even with the growing demand for EVs and batteries, some lithium producers are pulling back? That doesn't seem to make a lot of sense.
It might seem counterintuitive, but it all comes down to price. A significant portion of the global lithium supply is actually unprofitable at current prices, so some producers are being forced to make tough decisions.
So they're basically saying that the lithium market is correcting itself, that weaker players are being squeezed out, which could eventually lead to higher prices.
Exactly. It's a classic supply and demand scenario. The current oversupply is leading to lower prices, which is hurting some producers. But as those producers curtail production, the supply glut starts to ease, and that could eventually put upward pressure on prices.
So potentially good news for Albermarle down the road. But is the demand side of the equation still strong enough to support this theory? Is the EV revolution still chugging along, or are people getting cold feet?
The demand picture actually looks quite robust. Albemarle highlighted the impressive growth in grid storage demand, particularly in the US and China, that's exceeding expectations. And globally, electric vehicle registrations are still climbing, with China leading the charge. Even in the US, we're seeing strong double-digit growth in EV registrations.
So the EV revolution is still on track, which bodes well for long-term lithium demand. But how does Albemarle plan to stay ahead of the curve, given all the challenges they're facing? What's their long-term game plan?
Albemarle's overall strategy remains unchanged, though they're adjusting their execution based on the current market dynamics. They're emphasizing their four key competitive advantages: world-class low-cost resources, leading process chemistry expertise, an innovative pipeline of solutions, and strong partnerships with key industry players.
Those sound like some pretty solid pillars to build on.
Yeah.
Let's dig into those a little bit more. World-class resources. What makes Albemarle's resources so special?
Well, they have access to some of the highest grade lithium resources in the world, both in hard rock mines in Australia and brine operations in Chile. This gives them a real cost advantage in terms of production and efficiency.
So they've got the raw materials locked down. What about their process chemistry expertise? How does that give them an edge?
Albemarle is known for developing and implementing cutting-edge extraction and processing technologies. They're constantly innovating to improve yields, reduce waste, and lower their environmental footprint.
So it's not just about digging up lithium anymore, it's about doing it smarter and more sustainably. What about their innovative pipeline of solutions? What's cooking in their R&D labs?
Albemarle is investing heavily in next-generation lithium products and technologies, things like high-performance battery materials and advanced extraction methods. These innovations are aimed at meeting the evolving needs of their customers in the EV grid storage and other high-growth markets.
They're not just supplying the raw materials, they're developing the advanced ingredients for the future of energy. And finally, their partnerships. Who are they teaming up with to achieve their goals?
They formed partnerships with major players in the EV battery and tech industries. These collaborations give them access to key markets, cutting-edge technologies, and valuable insights.
So they're building a powerful ecosystem to support their growth. Albemarle's facing headwinds in the short term, but they're taking decisive action to control costs, optimize cash flow, and position themselves for long-term success. They're betting on the continued growth of the lithium market, fueled by the electric vehicle revolution and the rising demand for energy storage. And they're leveraging their four key competitive advantages: resources, process, chemistry, innovation, and partnerships to navigate this dynamic landscape. But we all know that earnings calls are about more than just understanding the company's story. It's about finding opportunities. So let's get to the part of the show everyone's been waiting for. What kind of outrageous but plausible trade idea did this earnings call spark?
Okay, here's a thought. What if Albemarle's aggressive cost-cutting measures, combined with a potential tightening of the lithium market, were to lead to a significant stock price rebound in the next 12 to 18 months?
Oh, I'm intrigued. Tell me more.
Just imagine this. You buy a call option with a strike price slightly above Albemarle's current price, say around $110, with an expiration date about a year out. If the stock rallies, as I'm predicting that option, could become very valuable.
So a leveraged bet on Albemarle's potential comeback. Risky, yes, but with the potential for a big payoff. Sounds exciting. But listeners, remember, this is purely hypothetical for entertainment purposes only.
Absolutely. This is not financial advice.
Don't go making any trades based on what you hear here. Do your own research, consult with a financial advisor, and only invest what you can afford to lose.
Precisely. It's crucial to approach the market with a balanced perspective, enthusiasm and caution in equal measure.
That's a great point, but it's also fun to explore different scenarios and think about the possibilities. So we've covered a lot of ground in this first part of our Albemarle deep dive, but there's still much more to explore.
Indeed. In the next part, we'll take an even closer look at Albemarle's financials, delving deeper into their balance sheet and cash flow statement.
Sounds good. We'll be right back after a quick break. Welcome back to Talk Tickers. We've talked a lot about the big picture stuff with Albemarle, but Now let's maybe, zero in on some of the less obvious details, the things that might have kind of slipped under the radar.
Yeah.
Sometimes, those subtle clues can give you a real edge.
Okay, I like where you're going with this. What are some of those hidden gems that you kind of unearthed from this earnings call? What should our listeners be paying attention to?
Well, one thing that really stood out to me was their operating cash conversion.
Okay.
Remember, exceeding 100% for the quarter.
Right. That's not just a random statistic. That's a powerful indicator of how well they're managing their cash, especially given the pressure from falling lithium prices.
Yeah.
They're really squeezing every bit of value out of their operations.
So it's not just about cutting costs. It's also about being smart with the cash that they are generating.
Exactly.
And that's critical for any company, but especially in a volatile market. Like lithium cash is king, right?
Oh, absolutely.
So what are they doing with all this extra cash? Are they just hoarding it?
Definitely not. They're using it strategically to bolster their balance sheet and maintain financial flexibility. They're also funding critical projects that will drive long-term growth and ensure they remain a leader in the lithium space.
So they're not just hunkering down and waiting for the storm to pass. They're making strategic investments in their future.
Right.
Can you give us maybe some examples of the types of projects that they're prioritizing?
Sure, they're continuing to ramp up production at their new facilities, particularly in the energy storage segment. Remember, they're forecasting volume growth of more than 20% year over year in that segment. That's a significant investment, even while they're tightening their belts in other areas.
It's like they're playing 4D chess here.
Yeah.
They're making moves to optimize their position for both the short term and the long term. They're clearly not panicking.
Yeah.
But let's face it, the lithium market is still kind of the 800-pound gorilla in the room.
Yeah.
What were some of the key takeaways from Albemarle's commentary on the current market conditions? Are they worried?
They're definitely not sugarcoating the situation.
Yeah.
They acknowledge the challenges, but also point to signs of a potential turnaround, for example. They highlighted the upstream and downstream curtailments we talked about earlier.
Right.
This means that some lithium producers are actually scaling back or even halting production. Why? Because a significant chunk of global lithium production is simply not profitable at current prices.
It's like a game of musical chairs, and some players are being forced to sit out.
Exactly. And this could ultimately benefit Albermarle. As these curtailments continue, the supply glut should start to ease, paving the way for a potential price rebound.
That's the hope anyway, but it's still a waiting game, right? No one knows for sure how long this downturn will last.
That's true. It's a complex situation with a lot of moving parts, but Albermarle's management seems cautiously optimistic about the long-term prospects of the lithium market. They're confident that demand driven by electric vehicles and grid storage will eventually outstrip supply. It's just a question of timing.
Okay, so they're playing the long game, but in a fast-moving market, you need more than just patience. You need a winning strategy. How does Albemarle plan to navigate this uncertain terrain and maintain its leadership position?
They're betting on those 4 pillars we discussed earlier: world-class low-cost resources, leading process chemistry expertise, an innovative pipeline of solutions, and strong partnerships with key industry players.
Right.
Maybe we can go through each of those quickly.
That's good. Starting with world-class resources, what makes Albemarle's assets so unique?
They have a diverse portfolio of high-quality lithium resources, including hard rock mines in Australia and brine operations in Chile. This diversity gives them flexibility and resilience in a changing market.
So they've got the raw materials covered. What about their process chemistry expertise? How does that give them an edge in a competitive market?
Albemarle has a long history of innovation in lithium extraction and processing technologies. They're constantly finding ways to improve efficiency, reduce waste, and minimize their environmental impact.
So they're not just focused on producing more lithium, they're also focused on producing it better and more sustainably.
Right.
What about their innovative pipeline of solutions? What's cooking in their R&D department?
They're investing heavily in developing the next generation of lithium products and technologies, such as high-performance battery materials and more efficient extraction methods. This innovation is critical for meeting the evolving demands of their customers.
So they're not just riding the wave, they're shaping it.
Exactly.
And finally, what about their partnerships? Why are they so important?
Albemarle has strategic partnerships with leading companies in the EV battery and tech sectors. These partnerships provide them with access to key markets, cutting-edge technologies, and valuable insights.
So they're not just playing their own game, they're building alliances and leveraging the expertise of others.
Yeah.
That's a smart approach in a complex, fast-moving industry. So to recap, Albemarle is facing some headwinds, but they're taking decisive action to control costs, optimize cash flow, and position themselves for the future. They're banking on the long-term growth of the lithium market fueled by the EV revolution and the increasing need for energy storage. And they're leveraging their 4 key competitive advantages: resources, process, chemistry, innovation, and partnerships to stay ahead of the curve.
Exactly. It's going to be interesting to see how this all plays out.
It certainly will be. And as always, we encourage our listeners to do their own research and due diligence before making any investment decisions. But, sometimes it's fun to just kind of let our imaginations run wild, right?
Yeah.
So let's get back to that outrageous but plausible trade idea you mentioned earlier. What if we were to take all of this information, the cost cutting, the potential market turnaround, the long-term growth story, and try to translate it into a potential trading opportunity?
Okay, remember, this is purely hypothetical and for entertainment purposes only.
Of course, this is not financial advice.
Right, but let's say for the sake of argument that you're feeling bullish on Albemarle. You believe that their cost-cutting measures will pay off, that the lithium market will rebound, and that their long-term growth prospects are solid. What could you do? Well, one option might be to...
Welcome back to Talk Tickers. We're wrapping up our deep dive into Albemarle's Q3 2024 earnings call. We've dissected all the numbers, we've analyzed all the strategies, but the big question is, what does it all mean for Albemarle going forward?
Right. Is Albemarle set to kind of ride this lithium wave, or are they headed for a wipeout?
Exactly. It feels like we're at a real crossroads here.
Right.
The short term is definitely looking challenging.
Sure.
The lithium market's in a slump. Their earnings reflect that, but they're also making some pretty big moves to adapt.
Yeah, they're not just sitting around, waiting for the market to shift. They're aggressively cutting costs, streamlining their operations, and becoming very laser-focused on their cash flow.
It's like they're battening down the hatches and preparing for, some rough seas ahead. But the big question is, can they weather the storm and come out stronger on the other side?
Yeah.
What do you think?
Well, I think there are a few key factors that are really going to determine their fate.
Okay.
First, what happens with lithium prices?
Right.
Will we see a rebound, and if so, how quickly?
Okay.
Second, can Albemarle execute on its plans?
Yeah.
Can they actually hit those cost-cutting targets and become more efficient?
Makes sense.
And finally, how does the EV and energy storage market evolve?
Right.
Will it continue to grow as rapidly as projected, creating that, sustainable demand for lithium?
So many unknowns. It's like trying to predict which way a flock of birds is going to fly.
That's a great analogy. The markets are always unpredictable, but that's also what makes them so exciting. And Albemarle, with their, strategic moves and focus on innovation, is definitely a company to watch.
All right, listeners, time for our final takeaway. What's the one thing you want our audience to remember from this deep dive into Albemarle?
I think the key takeaway is that Albemarle is at a pivotal moment. They're facing some serious headwinds, but they're also seizing opportunities. Their future really depends on their ability to navigate this volatile market, execute their strategy effectively, and capitalize on that long-term growth potential of lithium. The next 12 to 18 months are going to be absolutely critical.
It's going to be a wild ride. And that brings us to the part of the show that I know our listeners love.
Right.
Let's get to that outrageous but plausible trade idea that we teased earlier.
Yeah.
If you were a betting person, and remember, this is not financial advice.
Right. This is just for fun, for entertainment purposes only.
Right.
Exactly.
But let's say, for the sake of argument, you were feeling bullish on Albemarle. You believe that their cost-cutting measures will pay off, that the lithium market will rebound, and that their long-term growth prospects are solid. What could you do?
Well, one option might be to buy a LAPE call option.
A LAPE, for those who don't know, is a long-term option contract, typically expiring more than a year out.
Exactly. So you could buy a LAPE call option on Albemarle, maybe with a strike price somewhere around $120 and an expiration date in January 2026.
So if Albemarle stock price, jumps above $120 by early 2026, that option could be worth a lot of money.
That's the idea. It's a high-risk, high-reward play, but it aligns with the thesis that Albemarle is making the right moves to position itself for long-term success in the lithium market.
Of course, this is purely hypothetical, listeners. Please do your own research consult with a financial advisor and never invest more than you can afford to lose.
Absolutely. We just like to explore different possibilities and get people thinking about different ways to approach the market.
And that's what Talk Tickers is all about. We hope you enjoyed this deep dive into Albemarle's Q3 2024 earnings call. We've covered a lot of ground, but as with any complex topic, there's always more to learn.
Indeed, the market is constantly evolving, and so are we.
We encourage you to stay informed, stay curious, and keep exploring. Thanks for joining us, and we'll see you next time on Talk Tickers.